Welcome back to the Deep Dive. Ready for another week of market mayhem and economic puzzles.
Always.
Let's jump right in. First things first, what kind of week did the major markets have? NASDAQ, S&P, Dow Jones, dot place.
Late on me.
Not the most uplifting start to the month, to be honest.
Oh,
Yeah, the NASDAQ took a bit of a tumble, down 1.36%.
okay, so not great.
And the S&P 500 followed suit. Slipped by almost a whole percentage point.
Ouch.
Even the Dow Jones dipped, just under 1% though.
Okay, so a bit of a downer across the board. What about the 10-year Treasury yield?
That was actually interesting. It went up, bucking the trend, climbed by 5 basis points to 4.487%.
Huh, so a little glimmer of hope there. And what about everyone's favorite Bitcoin? Did it join the party or go its own way?
Bitcoin decided to follow the crowd this time, dipped 0.75%.
But. There's always a but.
Here's the one that really caught my eye. Tesla took a pretty big hit, closed over 3% down, landed at $361.62.
Tesla troubles, that's definitely worth digging into. What's going on there? Well, I think it ties in some of the bigger market forces we're seeing.
Like what?
Well, before we get to that, remember all those headlines about the University of Michigan Consumer Sentiment Survey?
Oh yeah, something about a big drop, right?
Right. A 7-month low, to be precise.
Yeah.
Before we get into the numbers themselves.
Yeah, good point.
Hmm?
What exactly does consumer sentiment mean, and why should we care?
Basically, it's how optimistic or pessimistic people are feeling about the economy and their own finances.
So are people feeling good or bad right now?
Not so good, according to this survey, hence the big drop.
Okay, so people are feeling gloomy. But how does that actually affect the market?
Well, think about it. When people are worried about the economy or rising prices,
Hmm.
they tend to hold back on spending.
Makes sense. Less money to throw around.
Exactly. And that can have a ripple effect. Businesses slow down, investments get put on hold.
And then the whole economy feels it, right?
Exactly.
I'm guessing all this talk about tariffs isn't helping people feel very confident.
You got it. This survey was conducted right after those tariff announcements. 10% on Chinese goods.
And didn't he also threaten tariffs on the EU?
He did, although the one specifically on Canada and Mexico got postponed.
Still, a lot of uncertainty floating around.
Exactly. And that uncertainty makes people nervous,
Mhm.
makes them less likely to spend.
Okay, so tariffs create uncertainty,
Hmm.
which affects consumer sentiment, which impacts the economy. Got it. But how much of an impact can these tariffs actually have? Are we talking a small dent or a major crash?
Potentially a major crash. Goldman Sachs is estimating that every 5% increase in tariffs could wipe out 2% of S&P 500 earnings.
Whoa, that's a huge chunk.
It is, because suddenly businesses have to pay more for those imports.
And they usually pass that cost on to us,
Yep.
the consumers.
Yep. Higher prices for everyone.
So even if I'm not directly importing anything myself, these tariffs can still hit my wallet through higher prices on everything.
Pretty much. It's all connected.
Okay, that makes those Tesla woes a bit more clear. You mentioned their sales were down, especially in places like Europe and China. Are tariffs partly to blame for that?
Most likely, tariffs make those Tesla vehicles pricier in those markets. Less competitive.
And buyers look elsewhere.
Exactly.
Okay, wow. So even things like my investments could be affected by these tariffs. That's wild.
It is. And here's another one for you. Even gold is being impacted.
Gold. Like the shiny stuff.
The very same. Just the anticipation of metal tariffs has sparked a mini gold rush.
People are trying to stock up before prices go up.
Exactly. Everyone's scrambling to ship it into the U.S. The result, there's a shortage in London vaults.
Wait, seriously? A gold shortage in London because of U.S. tariffs? That's crazy.
It is. It just goes to show how interconnected the global economy really is.
You do something over here and it causes ripples way over there.
Exactly.
Okay, all this economic talk is making my head spin. Let's switch gears for a moment and talk about something a little more fun. The Super Bowl.
Fun and potentially profitable.
Ooh, tell me more.
Did you know there's a whole betting market around the Gatorade shower they dump on the winning coach?
Really? People are betting on Gatorade flavors.
Yep. Apparently purple is the hot favorite this year. Could be going for a three-peat.
Purple Gatorade for the win. Now that's a statistic I never thought I'd hear.
Right. But speaking of the Super Bowl, Kendrick Lamar is headlining the halftime show.
Big name for sure.
It's more than just a great performance, though. The NFL's been on a bit of an image rehabilitation tour.
You're talking about all the controversy from a few years back, the
Yeah.
player protests and everything.
Exactly. They've partnered with Jay-Z's company, Rock Nation, to curate these halftime shows.
Trying to appeal to a different audience.
Definitely. Younger, more diverse. Think Jennifer Lopez, Shakira, Bad Bunny, Rihanna, now Kendrick Lamar.
So it's a calculated move.
Very much so. They're trying to rebrand, connect with a wider audience. It shows how entertainment can be a powerful tool.
Reflects and influences cultural shifts.
Ugh.
Fascinating. Okay, well, let's shift gears back to the financial world for a bit. I've been seeing a lot about big tech going on an AI spending spree. What's the deal with that?
Now, this is where things get really interesting. Microsoft, Alphabet, Amazon, Meta, they're all pouring money into AI.
How much money are we talking?
Estimates are over $320 billion this year, just for AI infrastructure.
Whoa, that's an astronomical amount of money. What are they betting on here?
AI has the potential to completely transform everything.
Everything. Like how?
Think personalized medicine, self-driving cars, more efficient financial markets, even tailored learning experiences.
Okay, that's pretty exciting.
It is. But there are risks too, of course.
Like what?
Job displacement as AI systems get more sophisticated, that's a big one.
Mhm.
And there are the ethical concerns too.
Like?
Data privacy, potential biases built into the algorithms, and the possibility of AI being used for harmful purposes.
That's a powerful tool.
Very powerful, with the potential for amazing progress, but some serious challenges too. We need to be ready for both.
Absolutely. Well, before we move on, were there any other notable news items this week that our listeners should know about?
A couple of things that might be of interest.
Like what?
The UK is demanding access to Apple's encrypted iCloud accounts.
Really? Why?
They say it's for national security purposes, but it raises some serious questions about privacy. Apple's pushing back pretty hard.
I can imagine. Anything else?
There's also the temporary delay in closing that China import tax loophole.
Oh, yeah, the one that lets those super cheap packages slide through without duties.
That's the one. Seems the Commerce Department is trying to figure out how to effectively collect taxes on those smaller shipments.
So those deals on Shein and Temu will stick around for a little while longer.
For now, yes.
Yeah.
But they'll figure it out eventually. Speaking of taxes, President Trump also mentioned wanting to get rid of the carried interest tax loophole.
Now, I've heard that term thrown around, but I'm not entirely sure what it means. Can you break that down for us? What is this loophole and why is it so controversial?
It basically allows certain investors, like those in private equity and hedge funds, to pay a lower tax rate on some of their profits.
So they're getting a special tax break.
In a way, yes. Instead of being taxed as regular income, it's treated as capital gains, which are taxed at a lower rate.
Ah, I see. So it's a tax break for a very specific group of people. I can see why that would rub some people the wrong way.
Right. Critics say it's unfair and costs the government billions in lost revenue. Supporters argue that it encourages investment and risk-taking.
Classic debate about tax fairness.
Exactly.
Wow, we've covered a lot of ground already. Volatile markets, tariffs, AI, tax loopholes. But before we move on to part two,
A cliffhanger.
you could say that. I want to leave you with something to think about.
I like where this is going. Lay it on us.
We talked about how consumer sentiment can impact the economy and how AI has the potential to revolutionize everything. So here's the question. With all this investment in AI and all the potential disruptions it could bring, how do you think consumer sentiment and behavior will be impacted in the years to come?
That is a good one. Lots to ponder there.
It is, and it's something to keep in mind as we continue exploring all these trends in the next part of our deep dive.
You know, it's funny how things that seem totally unrelated, like a Super Bowl halftime show and AI investment, can actually be connected to like these bigger economic trends.
It is kind of wild when you start to see how it all fits together. Like we've been jumping all over the place today, but
Yeah.
it's starting to feel like this giant web where everything is connected in some way.
Yeah, it's a giant web for sure. Take the Super Bowl, for instance. It's not just a game. It's like this huge cultural event. And it kind of reflects, changing attitudes, societal trends, things like that. The NFL trying to revamp their image and reach a wider audience, that's a perfect example. And then you've got this massive investment in AI, which has the potential to disrupt like whole industries and basically change the way we live and work.
And those changes are going to have a ripple effect on consumer behavior, which we already talked about plays a huge role in the overall economy.
Exactly. It's a fascinating feedback loop. And like understanding those connections can really give you an edge in navigating the financial landscape.
Okay, so we've got this big picture view of how things are connected. But what does it all mean for us on a personal level? Like, how can we actually use this information to make smarter decisions in our own lives?
That's the million-dollar question, isn't it? I think the key takeaway here is to stay informed and aware of the forces that are shaping the world around us.
So not just burying our heads in the sand and hoping for the best.
Definitely not. The more you understand about these trends, the better equipped you'll be to navigate them and make good decisions, whether it's about your investments, your career, or even just your everyday choices.
Knowledge is power, right? But how do we avoid getting totally overwhelmed by the sheer volume of information out there? It feels like we're constantly bombarded with news and data from every direction.
That's where critical thinking comes in. It's not just about consuming information. It's about filtering it, evaluating its credibility, and figuring out what's truly relevant and reliable.
So developing our critical thinking skills is like essential in this day and age.
Absolutely. It's about asking the right questions, challenging assumptions, and seeking out diverse perspectives. Don't just accept everything you read or hear at face value. Do your own research, dig a little deeper, and form your own conclusions.
That's great advice. It's so easy to get caught up in the hype or the fear, especially when it comes to things like the economy or new technologies.
It is, and that's why it's so crucial to have trusted sources of information, like, this deep dive, to help you cut through all the noise and get to the heart of the matter.
Okay, so we need to stay informed, think critically, and find reliable sources we can trust. But let's get practical for a second. We've talked about inflation, tariffs, and all these big economic forces. What does this mean for like the average person trying to manage their own finances?
I think that's a question a lot of people are asking themselves right now.
Right, like should I be buying gold to hedge against inflation? Should I be investing in AI stocks? Should I just stick to index funds and ride it out? What's the smart move?
Well, I can't give you specific financial advice, but I can offer some general principles to kind of help you navigate these uncertain times.
Perfect. That's exactly what I'm looking for. Lay some wisdom on me.
First and foremost, focus on the fundamentals of sound financial planning. Have a budget, manage your debt, and save consistently. These are like the cornerstones of a strong financial foundation, no matter what's happening in the broader economy.
It's like building a house. You need a solid foundation before you start worrying about the paint color or the landscaping.
Exactly. And building on that foundation, it's wise to diversify your investments. Don't put all your eggs in one basket, so to speak. Spread your risk across different asset classes like stocks, bonds, real estate, and maybe even some alternative investments.
Diversification, I hear that a lot. But why is it so important?
Because it helps you weather those inevitable ups and downs of the market. When one asset class is struggling, another might be thriving. That balance helps protect your overall portfolio from significant losses.
So don't panic and sell everything when the market dips. Stay calm and stick to your long-term plan.
Exactly. It's about riding out the waves and focusing on the long game. Don't let short-term market fluctuations derail your financial goals.
This is all really helpful. I think a lot of people, myself included, get caught up in trying to time the market or chase the latest hot stock tip. But really, it's about building that solid foundation and diversifying.
You got it. It's about playing the long game, not trying to get rich quick.
Okay, so that's great advice for managing our investments. But what about navigating this whole world of AI and all the potential disruptions it could bring? Any tips on how to prepare for that?
I think this is where the concept of lifelong learning becomes really important. The job market is going to keep changing as AI gets more and more sophisticated. So it's vital to stay adaptable, keep learning new skills, and be open to new opportunities.
Don't be afraid to step outside your comfort zone.
Exactly. The future belongs to those who are willing to adapt and evolve.
That's an inspiring thought. So to recap, we need to stay informed, think critically, build a solid financial foundation, diversify our investments, and embrace lifelong learning. Those are some great takeaways for anyone trying to navigate this crazy world.
Absolutely. And remember, this is an ongoing conversation. The world is constantly changing, and we need to be adaptable and willing to adjust our strategies as needed.
Well said. Now, before we wrap up this part of our deep dive, I want to touch on something we briefly mentioned earlier. The UK's demand for access to Apple's encrypted iCloud accounts. This raises some serious concerns about privacy in the digital age, doesn't it?
It does. This move by the UK government has definitely sparked a lot of debate about the balance between national security and individual privacy rights. Apple's pushing back hard. They argue that it would set a dangerous precedent and compromise the security of all their users.
It's a tricky situation for sure. On the one hand, governments have a legitimate interest in preventing crime and terrorism. But on the other hand, we don't want to live in a world where our every move is being monitored and our privacy is constantly under threat.
It's a complex issue with no easy answers, and it's one that we're likely to grapple with more and more as technology keeps advancing and blurring the lines between our physical and digital lives.
It's definitely something we need to be aware of and engage in thoughtful discussions about.
Right.
We can't just blindly accept any policy or technology without considering its potential impact on our privacy and freedoms.
You're absolutely right. We need to be informed, engaged, and advocate for the kind of future we want to live in.
Well said. And with that, we've come to the end of part 2 of our deep dive. I hope you're finding this information helpful and maybe even a little bit inspiring.
I hope so too. We'll be back shortly with part 3, where we'll delve into some final thoughts and leave you with some provocative questions to ponder.
Welcome back to the deep dive. We're in the home stretch now. Before we wrap up, I want to circle back to something you mentioned earlier about, staying informed and adaptable in a world that just keeps changing.
It's key, especially now. So much happening so fast. Tech, global power dynamics, economic uncertainty. It's a lot.
It can be. But instead of getting bogged down in all the complexity, maybe it's better to focus on what we can actually control.
I like that. It's easy to feel powerless amidst the chaos, but there really is a lot we can do to empower ourselves.
So beyond building a solid financial base and diversifying investments, what else can we do to stay ahead of the curve?
Embrace lifelong learning, just like we talked about. The skills that are hot today might be totally useless tomorrow. So be curious, explore new stuff, and always be updating your skill set. There are tons of online courses, workshops, resources. It's all out there.
Got to be comfortable with constant learning.
Exactly. And it's not just about tech skills either. Soft skills are huge. Communication, problem solving, critical thinking, creativity.
Those are the skills that'll always be valuable no matter what. I like that.
Yep. Makes you adaptable, helps you thrive no matter what the environment throws at you. Any other wisdom you're looking for before we wrap up?
Hit me with it.
Here's a thought. Don't be afraid to challenge the status quo. Question assumptions, think critically, and don't just blindly accept what you're told. There's so much information out there. Gotta be a discerning consumer.
Informed, thoughtful, engaged.
Yes. And don't be afraid to have healthy debates with people. Get different viewpoints, challenge your own beliefs. That's how we grow.
This has been an incredible deep dive. Learned so much. But even more than that, you've given us a framework for thinking about the future, navigating this crazy modern world.
I'm glad to hear that. And this is just the beginning. Keep exploring these ideas, asking questions, sharing your own insights with others.
What stood out to you today? What questions are you still thinking about? Let us know.
Who knows? Maybe your questions will spark the next deep dive.
Speaking of which, stay tuned for our next episode. Whole new set of fascinating topics coming your way.
Until then, keep those brains buzzing.
That's a wrap for the deep dive. Until next time, stay curious, stay informed, and keep diving deeper.
See you on the next dive.